Good morning, everybody. How are we all doing? Happy New Year to you all. Long time no speak. It's been a few, maybe a week or so, maybe a bit longer without any videos. But obviously, it's been the festive period. There's not even been a lot going on in the charts either. So yeah. But we are back at it now. The new year. It's a holiday, obviously in the US, but things should pick up later on this week. But yeah, so that all being said, let's go straight over to those Bitcoin 4-hour charts. So yes, it's been this long we've looked at it that I need to extend over our little grey box here. But yeah, as you can see, as of now, we are still holding above this this important level of support. This is the level that if we lose, then yeah, I mean, we're looking down towards probably $14,000, $13,000 handle on Bitcoin. However, at the moment we are managing to hold it, albeit only just, as you can see. But yeah, tiny little pump we've got going on this morning. I know it feels like a big pump in the context of the volatility we've had recently, but yeah, it's not the most significant of pumps. But yeah, nonetheless, we'll take Bitcoin over 17,000. That would be nice, and that's only $300 away. So yeah, let's see what this week can bring us. Let's go and have a look at the stock market. Stock market is in and around this area, trying to get back above it. I mean, it's not really acted as support. It's more kind of like it's broke below and acted as resistance. So the stock market has got to try and get back above this level, back above. I mean, we could call it 38.80. And then try and take out what would be this horizontal level, and also this downward sloping trend line. If it does that, then we could get the actual decent acceleration to the upside and a new bull market. But the thing I would look at here is if we can just hold here. We're obviously gonna put in a higher low relative to this low here, and then finally potentially change this downtrend that we've been in for a long time. That would give us a good chance then, as obviously breaking this trend line, especially seeing as the trend line would then be lower at a lower price point, and then potentially we can see acceleration to the upside. Maybe they come back and we backtest into the trend line, and then continue our merry way. Obviously we've got a bit of a problem going here in the bond market. Broke below this important level of support, couldn't hold it below it, and broke back above, and at that point it kind of looked like it was going to then trade higher. Yeah, we are now at an important level of resistance that we don't want to take out. We've come as far as this trend can go without potentially putting in some serious damage to risk assets. If it takes out this level, then yeah, I mean, who knows where we're going to go. 5%, maybe higher, 5.5% will be absolute chaos. So yeah, we need to hold below here, and then we need to then trade lower, take out this low, and then establish a downtrend in these yields as well. That is what we that's what we need to do for risk assets. DXY is not being as bad as the bond market is, as the yields are, and it is trading at a 103.5 handle. So yeah, that's pretty nice to see. I wouldn't like to think what if this had turned up like the bond market had, like the 10-year yield had. What would be going on with risk assets now? Because I wouldn't expect it to be very nice at all. However, this is obviously a tailwind for us, but again, at some point this will get a bounce in exactly the same way the yield did here in the 10-year, and when it does get that bounce, yeah, potentially risk assets may struggle. But yeah, we'll see what happens here. As you can see, looking like we are hopefully putting in a high here, a macro high, and then it's how low can we go, and how high can risk assets go. And that'll be the game. Gold also up at the underside of this resistance, struggling to even test into it, let alone break above it. So yeah, gold up there. What I would look at with gold is the gold-silver ratio, which has taken out this important level of support. So if we look at this on a daily, you can kind of see we had that crazy spike up here. where Tone Vays was like everyone needs to dump their gold for silver at literally the high. Yeah, we came down, had a nice bounce like you'd expect, didn't get anywhere near that high, and now are trading back down, taken out this support level. So if this can continue lower, what that does indicate is there is a potential bull run in the precious metals. With obviously silver outperforming gold going down against silver in the ratio, and then that could obviously ironically enough, that would be good for risk assets, because everything seems to be correlated at the moment. It's just a liquidity trade. So obviously historically, gold doing well is inversely correlated to risk assets, but that is not the current reality in which we reside. Let's look at the USD Japanese yen, because that is also looking like it is topped out and can trade lower. This is also good for risk assets. Yeah, we've got that going for us. I mean, well, we haven't got it drawn in, but we're there at an inflection point here. We seem to be at a number of inflection points in a number of markets, and we are starting a new year. So can we get at least the year off to a good start, into January, end of January, maybe early Feb, then potentially get a bit of a pullback, and then catapult our way higher in risk assets. That is the gold. That's what we're hoping for. I guess Goldilocks scenario is straight up and up and to the right and not looking back. But yeah, more realistic Goldilocks scenario could be that. What else you want to look at? We'll just see how Europe's doing. Yeah, Europe having a nice bounce here from this low. Could it have put in a low? It could have done. Also, the euro against the dollar at what is looking like a relative inflection point stroke area. We can probably draw this range from about here to about here. Currently trying to break through it. So yeah, I mean, there's that as well. That would look good for risk assets if that is able to break and trade above there. What else can we look at? Stochastics. We'll have a quick look at the stochastics now, especially those higher time frame ones. But yeah, 4 hour getting a bit elevated here. Probably what you'd expect with the current iteration of price action. 12 hour though, turning up from a low area, all the field to run into. So plenty of support potentially coming off the 12 hour. Daily I expect will be relatively similar. Yeah, daily relatively similar, pointing up, coming from a low area, looking a good read for holding us up. By daily though, pointing down. Is it gonna hit this trend line that we could kind of draw here, turn back up and continue to the upside? If it does, then I mean, yeah, we could be looking at those low 20k bitcoins by the Bitcoin by the end of January time. 3 days freshly turning down though, so that is not ideal. 5 day is turned down here as well, and weekly looking to turn down. Bi-weekly even at this low level looking to turn down, so that is not a good read. And monthly is still down, not managed to turn up. So yeah, whilst obviously daily and daily and 12 hour looking like they can help us up, these larger time frames, there's definitely work needs doing there. However, if we do get a move up, we do get an expansion of volatility, and we do get back towards this 20k level, that should be enough to turn up these higher time frames, and then we can get a move into the hopefully towards the mid 20ks, and then obviously see what happens at that point. So downside is clearly defined though. Any starting to close below this support level, then we're opening up 13,000. I see people calling like 9k sub 10k. I mean, first things first, like let's get down here first, see if we don't put our bottom in here and bounce there, and if we don't, then yeah, we can call 10k 9k. But yeah, around 14,000 will be our first port of call. So yeah, that is about it, guys. Remember, this is not financial advice. I'm not a financial advisor. Welcome to 2023. One thing we can say with a relatively high statistical chance of being correct is that 2023 can't be as bad as 2022. I know we've had it pretty rough in the crypto market, but in all fairness, bear markets for crypto are worse than what we've had so far anyway. But finance 1.0 markets, particularly the very highly esteemed safe bond market, I've not had years this bad since I believe it's even since records began, or maybe around 1913, I think. So Finance 1.0 with its volatility and risk adjusted metrics are having a lot worse time than Bitcoin, and we've had an absolute phenomenal amount of wealth destruction this year. Obviously with bond prices collapsing, obviously stock markets, well, not collapsing but coming down a lot. And yeah, I mean, it's the next shoe to drop, the housing market as well. So yeah, there we go, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.